Lyle Tabb the fourth. I'm the fifth generation to farm here in one way or the other. We used to dairy, but now we concentrate on corn and soybeans for grain and have some beef cattle and grow all the feed for those beef cattle. In the spirit of diversification, we also have some recycling processes we do here that fill in some gaps, and while that's not traditional agriculture, it does fit in well with the other things we do here. My family first started farming here in 1874. Lyle Tabb and Son Incorporated was formed in 1976, and there's been a lot of growth and changes since then. We manage about 1,700 acres total. 960 of them are row crops, mostly cash grain, but also part of the crops we grow for feed, and a majority of the rest is hay and pasture. Our farm encompasses about 1,700 acres. We rent just under half that. 960 of those acres are for row crops, corn and soybeans and wheat, and the rest is majority hay and pasture. I feel that our largest risk by being involved in production agriculture is obviously the weather. We've kind of trained ourselves to manage all the things that we are able to manage to the best of our ability, mainly our production cost. But there's no telling how much rain we're going to get, how many growing degree units you're going to get, and that's applicable to corn, as well as late frost, early frost, you name it. So the weather is the real wild card here. I got started with crop insurance. It was kind of handed to me because my father managed the crop acres and the things that went along with that before I did. So there was already a crop insurance agent here. We found a better option and switched agents, and as a result I understand the whole ins and outs of the crop insurance program and how the subsidies work as a result. Crop insurance helps me manage farm risk by, one, having a concrete cost of what the crop insurance is going to be very early. Of course, you've got to be signed up by March 15th, and I've got a quote that's pretty much set in stone at that point. It also allows me to know that my costs are covered should there be a catastrophic weather event. At the end of the day, yes, crop insurance is expensive when I write that check, but once you apply it to the acres, our per acre cost, crop insurance is one of the cheapest things that we buy, that we apply to that acre. As far as the choice of crop insurance products available to me with what I grow, corn and soybeans, we have tweaked our policy to do different things as different things have been available. So, for instance, you can elect to cover your corn soybean acres with optional units or enterprise units. There's a new option for last year that I'll probably elect this year called the trended average, meaning you can take 4 years of yield history and apply it to your protection versus 10 years of yield history. And as a result of that, we would cut out 2 years of drought that really knocked down my per acre yield, and then of course knocks down my average. And as well, the last 4 years, our yields have really been going up. So that would be a way to bump up our yield average. As far as crop insurance products, I've looked at, there are different ways to tweak the policy, and those maybe could be called different products by the agent. For instance, optional units versus enterprise units, as well as the trended average yield, which was made available last year, that takes your yield history and puts it in a more favorable snapshot if the last 4 years have been better yields for you. I would recommend crop insurance to other crop farmers, mainly because when you figure in the benefits and the history we've had of having 2 crop failure years in 2007, 2010, the benefits we received in those years versus the cost per acre, it's a very easy decision for me to make. So I do think most of the farmers I talk to that don't have crop insurance, they look at that one-time premium check as way too much money to spend. But when you break it out per acre, it's very affordable.